Hello everybody. Another week has gone by, dominated by two main topics. Fears of a slowdown in global economic growth and, of course, the ongoing Brexit saga. So starting with the fears of global economic growth, a lot has been said this week. It all started with Christine Lagarde, the person in charge of IMF, the managing director of IMF, who at Davos voiced concerns over a slowdown in global economic growth and talked about the downgrading of the IMF estimates for 2019. So why is this such a concern? Well, it is a concern because there are trade tensions between the US and China which are still persisting. We are going through a period of truce, but the tension is there. The CFO of Huawei, who's detained in Canada, awaiting extradition to the US, is a focal point in this tension at the moment. The US are insisting on having her extradited, and this obviously is not good news because the Chinese are not happy. So that lingering tension is there, is threatening the future of the negotiations, but we'll see. Also, there's the US government shutdown, which is not really helping. At the moment, we don't see much of an impact in the economy so far, but it has been going on for about 30 days. And if it persists, it's very likely that it will start impacting in the economy. And also, we must not forget that come March, there will be a renegotiation of the debt ceiling in the US. There is a hostile Congress, there is a president term who's very strongly opinionated, and we don't see how the two parts will come to any sort of agreement to stop the government shutdown and then also to negotiate the debt ceiling in March. So this is also something else to look at. And of course, there's the slowdown in GDP growth in Germany, which actually presented negative growth in the last quarter. So this is very worrying. And the slowdown in growth in China. Of course, the Chinese economy is still growing very, very strongly by global standards, but considering what we got accustomed to from the Chinese, not so encouraging. There's also political tension in Europe. Matteo Salvini criticizing the French. Not good, not helpful. So these fears of slow economic growth at the global level are not helping the markets. We've seen a rebound in January. It's true that some of the losses recorded in the last quarter of 2018 have been recovered. However, this has been done on very low liquidity because most investors are sitting on a fence at the moment. No one really wants to commit because there's still fear over what's going to happen in 2019. Also massive question marks over what will be the behavior of the Fed. So a lot of people sitting and waiting. And then, of course, there's the other main topic of the week, which is, again, Brexit. So Brexit is sort of crystallizing into a polarization between two camps. It looks like that it's either hard Brexit or Remain. Theresa May is still struggling, still trying to convince allies and even some opponents to back her deal by arm twisting everybody on one camp to say, listen, it's my deal or no Brexit. On the other hand, saying, listen, it's my deal or hard Brexit. But it doesn't look like she's going very far. So it may be a case of having a delay to the triggering of Article 50 on the 29th of March because the conditions are not there for things to move on in a healthy and positive way for both Europe and the UK. And then we'll see what happens. At the moment, the pound 130 is good, but reflects indecision. If things go down easily $1.10. If we get good news, so more on the Remain side of things, then we can get up to 150. But we'll see. This is all I have to say for the week.